Good morning, good morning. Happy Fed Day. How's everyone doing this morning? Hey JB, how you doing? Long time no see. Hey Badir, Joe, Travis. A little bit of a slow creep before the Fed. Let's see what we can do. Might be a bit of a slow session. Welcome to the folks joining us on YouTube. Okay, well, overnight inventory is a little bit long. Our not expecting a lot for trading as we have the Fed meeting at 2 p.m. Eastern Time, which is 7 p.m. UK time. Oh, yeah, so let's go take a look and see where we can make sense out of this. I've got, let's see if we accept over 68.54. So if you're wondering how I find these balance zones, right? We're going to do it here. I've got VWAP anchored, should be anchored at, yeah, anchored at 11 o'clock UK time, 6 p.m. Eastern time. And so when I look for balance, I'm looking for a low and a high. And when you look below that low, you come back to that high, just back and forth. You can almost even use this right here. High, low. Yeah, it's a bit off. Let's see if I can clean this up a little bit. There we go. Yeah, and then you just double it. And what you're basically doing is you look for sideways action, which is a cost basis, and then you double the cost basis so you find where 2 times profit would be of that cost basis. It's very simple, right? It's business, right? It's not math, it's business, right? And it's not psychology, it's just business, right? Trading is a business. There's no, psychology is great and everything like that, but psychology is for traders who are having downturns and portfolio managers who are having a bad quarter and stuff like that. They've taken that and they've made it like a norm for retail traders to talk trading psychology when you should be talking trading knowledge and you should be talking mechanics, right? So no amount of psychology is going to make up for lack of knowledge, right? Hey Ian, how you doing? Joe, how are you? So let's see what we've got here. Some choppy areas and then some larger moves and then choppy areas and then a larger move. Kind of slow. Hey Dan. Hey Dave, what's up? Yeah, so you could see candle charts are great for this. if you're not used to looking at TPO charts. You know, a candle chart shows you where the cost basis is. This is the discount area. Now we're taking this cheap stuff here and we're going and selling it up here for profit. That's why it's called a market. So let's go take a look and see where our upper stops are. Be the L high here. And upper stops, basically all that means is anyone who is short at different time frames, and we discussed time frames yesterday, they will have their stops generally at the top of these half-hour areas. Think of that as a half-hour candle. Hey Moran, how are you? Probably, if it's nice and slow, we'll just do about a half hour, get you guys ready for the day. Most of you will not be trading because of higher margin requirements. Um, I haven't traded yet this morning. I don't really see much worth doing right now. We're in distribution. The cost basis is under 50 for the night. So just moving off some cheap product that we took in yesterday. Yesterday we liquidated into the close. You can notice that the last two half-hour bars after 4 o'clock were lower. So N period was the low of the day, believe it or not, and then O period down there we did not take the high of M. So we've got a little bit of liquidating volume from yesterday's end of business that's being taken and sold higher. You can see it really clear here, right? So here's that liquidating volume from yesterday. There's the sideways action of the overnight. That sideways action, price stability brings in buyers. You know, you get a few people shorting it here and shorting it here. That helps push price higher. Always helpful. And now we just sit and wait. Any questions? There's really not much going on. See how the market's creeping a little higher? This is just short covering now, right? So what happens is when a market goes sideways after a liquidation, right? The smart money shorts will come in and cover. We did a look below and fail of yesterday's low, right? So you get position, and what happens is anyone who's short under 50, they're going to be trying to buy it back now, and that's what's pushing price higher, right? So as soon as the shorts go and start taking the offer, you'll see you delta guys will see delta going higher as they take the offer because they cannot get supply on the bid. Price will go up, and then FOMO longs will join in those shorts and push price up. The people who are long here will sell into it, right? So that's basically the mechanics of what's going on tonight. Not really too exciting. We're hoping for some better price action after this Fed. That would be nice. Till then, you just really take the day off, go relax, you know, maybe do some chart replay at, on busier times. Yeah. If you're overtired, but here, take it easy, don't trade. Were you up all night working on the software? Yeah. Never trade when you're like really tired, when you're really grouchy, when you're angry. All of those things are going to affect your judgment. When I was on the trade desk and if there was somebody trading against me in a deal, I would screw with them so much, try and get them angry, make them make them make mistakes, you know? Couldn't sleep. Anytime a trader is off kilter, angry, upset, stressed out, they're just so easy to take advantage of. If it wasn't December, would you normally trade indices before, during, after? Sometimes it depends, Dan. Sometimes FOMC days are really like crazy wild. Sometimes they're really slow. So it all depends. It's really like it's what the market gives me. Sometimes the market doesn't give you very much at all, you know? Sometimes you go into a market and there's nothing to do, right? But if it's active, sure I'll trade it. Now, I don't normally at all trade during FOMC, and there's a reason for that, right? A lot of people like to trade it. Um, how do I say this in a politically correct way? They don't trade it well. They screw it up because it's very volatile, and they don't understand what a thin order book is. Um, a lot of people are out there putting money at risk um, with very little or no knowledge at all. Kind of a scary thing, but hey, that's life. Um, when you look at an order book, let me show you what I'm talking about. When you go to look at an order book, or as other people call it, the DOM, right? Um, you'll see the size of the orders on each side, right? Now, if you guys are freaking out that my DOM's on SIM, yeah, it's on SIM because this is my demo account, and I'm going to open my trading account now. But you'll see, look at the numbers on the side of the DOM, right? So when FOMC news comes out, these numbers will go from 10 and 60 and 100 to like 1, 6. There'll be gaps in it because the order book will get really, really thin. Now, why is that? Right? I'm going to tell you guys, I'm going to be very politically incorrect today because it's FOMC day. Okay? So, when risk gets elevated, right? In high risky environments, right? When you know it's going to be dangerous to put your money in a market, there's two types of money. There's two types of participants. Okay? There's smart money and then there's dumb money. So dumb money chases price. Dumb money gets anxious and they get FOMO, right? And we need dumb money because dumb money is our food, right? And then there's smart money. There's the rest of us who wait for our opportunities. We have a business setup and an execution plan around a business setup, and we transact when that setup shows itself. And we also have a very, very strict risk plan, and we have a business reason for a trade. Now, if these people on the internet, if they can't tell you what the business reason is for the trade, then they're full of poop. Okay? A trade is a business transaction. There has to be an underlying reason to take the trade. It's either too much supply, lack of supply, sell orders are done, sell orders are initiating, right? So if You cannot provide the business reason to take a trade. If you're doing it just to see what happens, then you're dumb money. And you're going to lose your money, and you deserve to lose your money. Very simple, right? Very unpopular thing to say, but you deserve to be eaten. And you are food, and you will be eaten. What we do at the Trading Syndicate is we teach you how to be smart about this. Because listen, you guys are monkeying about in a business where trillions of dollars are moving around the world. And if you don't have any idea what's going on, you are going to simply just lose all your money, right? So it's better to learn how to trade from someone who's actually worked in the business. If you're going to do things like volume analysis, learn volume analysis from someone who's actually traded volume, right? So keep things simple. Look for the buyer, look for the seller, have a couple of business setups. Take only those trades that matter to you. When the market, what I'm trying to say, folks, is when the market starts getting volatile and you have a small account and very little skill, you should not be in the market. So 2 o'clock Eastern time is when the Federal Reserve comes out. The last thing a retail trader wants to do is go jump in that. Have you guys ever seen the guys who surf the big waves in Portugal at Nazaré, or Jaws, or Pipeline, or any of those big wave surfing things, right? You don't see guys who don't know how to surf just going out into a 30-foot, 40-foot wave. That's just stupidity, right? And you will die, right? So a little bit of common sense, right? If you don't know which money you are, then you're dumb money. Exactly, brother. Come with me, I'll make you smart, you know? You know, the offer stands. I mean, we've got a deal now with our AI trading coach in the room. It's 19 bucks a month. And you'll pay a lot more for other trading rooms. Um, you won't get a better education that's actually actionable, right? You know, I'm not going to charge you $200, $300 a month because you guys aren't going to learn anything that's going to make you money in a month. Like it's not a magic pill. It's going to take time, so we keep the price down to help people take their time and learn and, do a proper job, right? What are my methods to get them angry? I can't tell you that, Harris. Omerta, man. That's not for you guys. That's not for you guys, right? So let's see this market. Candles are small, right? Business is slow. It's like tick by tick by tick. But what do you guys notice just right off the bat? Now let's put our smart money hats on, okay? What's our smart? What if we're smart? What are we doing? The candles are slow. That means business is slow. The candles are small, which means business is slow, right? How do you know when to do business? Well, listen to me and I'll tell you. The first trade that every trader should do and learn is what we call the look below and fail. Okay? That's when the market goes underneath a level, the sell orders are complete, and it comes back up over that level. Right? Now, how do you know that the sell orders are complete? Well, you don't. That's why you have a stop. So the business reason for taking the trade is the sell orders that took it under 46 are complete. So you buy maybe 47, 48. You put your stop at 46. You sell some at 50. That's the trade, right? It's nicer when the zones are bigger, right? But I'm just doing this for illustration. right? There you go, Truth. Offers are lifting, but slowly. Do you want to short this? Not right now. You want to wait for a seller to show themselves to short it, right? We're in the front side of the move. You want a really nice short is if we looked above 58 and 3/4 and came back down, then you could sell 58, 57, put your stop here, right? So you short here, you have a structural place to put your stop, you have a business reason why your stop works, you cover some here and you cover some here. While it's doing this, there is nothing for you to do. This piece of business right here is for wholesale longs to sell their inventory, right? I have traded volume, yes. I have traded more volume in probably a day than most of you guys will trade in a year. I'd say I've traded more volume in a day than all of you guys put together will trade in a year, right? And that's not me boasting, that was just work, right? So the way I work in my business is people would open accounts with me, right? And they would say, okay, JJ, this account, we're going to drop 10 million shares in this account. In 3 weeks, we want you to turn those 10 million shares into cash, right? So I never had clients that said, oh, should I buy Microsoft? Should I? No, look, there's 5 million, 10 million, 20 million. We want you to run this deal, run the trading on it, make sure, build the chart, right? So what I do is I create the chart. We start trading the stock back and forth, trade the chart, bring people in, right? Get people to buy it, build the chart. Now the chart is like a party invitation. So when you build out a chart, what you're doing is, I'm going to talk about this a little bit, so hopefully you guys can get a sense of how the world works, right? So when you build out a chart, what you're doing is you're trying purposely to bring people in to buy, right? You're trying to get them excited, right? You want to get them excited. You want to get them, coveted. Like, so for example, here's one. This is a simple one. This is like just when we started. So you start building out the volume on the first couple of days. This is when the deal is in infancy. You started at around $1.50, and then you just slowly creep it up. And what you're trying to do is you're trying to bring in people that's $4.5 million. That's a very small day, just 1,400 trades, right? And out of that $4.5 million, we will have sold at least $3 to $3.5 million worth of stock, right? Just on that day. Now that's a small deal, but it's just to show you how business is done. Same thing with this, right? So what we do is we bring in buying, right? We bring buying in and then we sell into it, right? So you make a couple of, you make 5, 10, 15, 20 million dollars in a few days, and then you just build a chart. These charts are all built. They're not randomly happening. You guys think it's random, right? Random is a dumb money word. It's not a smart money word, right? So we will do that over and over and over and over and over, right? We'll bring in people to buy the stock. We'll create the chart. You guys will come and then we sell you the stock, right? Just like, you know, somebody wants to sell you something, they put a TV commercial. You guys all go running into the store. I was watching The Dropout about the Theranos thing. And, this Elizabeth Holmes, she was standing in line to buy an iPhone on the first day it came out, right? And they were all like, all these people were standing in line, and this one guy's like, I got the first one. And they're all cheering. They stood in line to open up their wallets and give you money. That's a beautiful thing, right? If you're the seller, right? So if you come into my trading room, we're going to teach you how to think like somebody who works in the business as opposed to somebody who gets eaten by the people who work in the business, right? And that's what we want to do. So we want to keep you liquid, which means we don't want you blowing up accounts. We want you to trade only when it makes sense to trade, right? If you think anything is random, guess what? You're the random, right? If you think that people put billions of dollars to work every day and just think about random outcomes and game theory, you're out of your mind, right? Nobody takes that kind of risk unless they know the result. And what's a market for? A market is to distribute, right? You bring people in to buy your product. That's why they call it a market, right? Stock market, food market. Raj, what's up? How you doing? So right now, this market is pretty much untradeable, right? The only way you could have traded it is if we were up hours ago, bought a position between 46 and 50 and selling it at 54. Not the greatest trade. Also, what else is going on today? Margins are up, so you're going to have less people, right? You have less people trading, you have less follow through. Right? Miguel, ¿qué pasa? Hi, JJ. To operate an opening, how do you recommend doing it? What is the best way to do it, or how would you operate it for a retail merchant? You mean when the market opens? How to trade the open? If you're retail and you're brand new, you should never trade the open because you have no clue what's going on. Let the market open, let the chart build out a little bit, go find the bid. The first thing you do is when a market opens, Miguel, is to go find the bid. Find where the big buyers are. How do you do that? You let the sellers sell it down to a certain level and stop. When they stop selling, that is an indication that they have found size buyers. Then they will move the market higher to try and get those buyers to chase price higher. Does that make sense? So when a market opens, for instance, right? So a market opens, goes up a little bit and comes down. When it comes down, there'll be a place where the wholesale longs will see bids. That is what you call support. Those are buy orders, right? They're all sitting here waiting to buy. So the wholesale longs will then start lifting the price, and they won't fill these buyers. Unfilled buy orders create support. Unfilled sell orders create resistance. So the best way for you to do business if you're a retail trader is, especially if you are not fast, if you're not a good trader, and it's okay. None of us start being a great trader. That's a poor high with the London Open. Sit and watch and wait for your opportunity. When your opportunity, right, well, look below and fail presents itself, take the trade, right? If the market is volatile and jumping around, don't jump in there, right? Wait till it slows down. See, the only good thing about retail trading is that you get to do business on your terms. So what does that mean? That means that you shouldn't be doing silly things, right? You should be waiting for the right business opportunity. Hope that makes sense. A lot of people get really like, I remember when I started retail trading, people would be like, they'd be drinking Red Bull and, okay, the market's going to open. All right, let's go. And they'd all trade and lose money. I'm like, you guys are like idiots. What are you doing? Right? That's not how you do business. Right? So wait, Let the chart build itself out. Gather intelligence. Do you guys know what gathering intelligence is? Right? You go and you look for clues of where the buyers are and where the sellers are, and then how do I interact between the buyers and the sellers, right? Because you're really neither, right? We don't have product for sale, and nor do we have to buy a lot of product. So we're just trying to catch a ride. So, we're like those kids who grab onto the back of the car when they're on the skateboard. What your job as a trader is to analyze the flow of traffic. Does that make sense? So here the flow of traffic is, they've loaded the product into the truck, they take it to the first store, sell it for a little while, and then take it to the second store, sell it for a little while, take it to the next store and sell it. Now, if there are no more buyers here, they'll put the price on sale. You guys are being very quiet. Does this make sense to you guys? The way I explain it? Yes? No? Maybe? Okay. When you first start trading, you're not going to know anything, right? That's okay. Be patient with yourself, right? When they tell you to be patient in trading, what they're trying to tell you and what they don't accurately tell you or verbalize is that you need to be patient with yourself, right? Not with the market, right? Be patient with yourself. You're not going to learn everything in 1 day or 3 weeks or a year even, right? Especially if you're trading on bad information, it's going to take you a lot longer to become profitable, right? If you have the wrong information on which you're basing a business decision, it's going to take you much longer to become profitable because you're not even going to figure out what you're doing wrong, right? And that's why I really think that education is the most important thing. Now, I realized, they're going to put me in the box with a monitor, Rebel. you know, I love this business, right? I've always done something in it. Even when I wasn't on a trade desk, I'd be doing investor relations or marketing for deals, something. Always in it, right? It's really hard. The hardest. See, retail trading is the hardest job in finance because number one, you have no clear source of proper information, and that is why we came up with this AI, which has been fed from trusted sources. So that's number one with our AI trading coach, is that you get proper information. You're not getting information from some guy who used to run a hot dog cart is now teaching people how to trade, right? So that's number one. Number two is you have no oversight, right? What does that mean? You have no one sitting next to you going, are you insane? Why would you take that? Right? Why would you do that? See, that's the thing that we have in the business. We have a head trader, we have people who coach you, you have owners of the firm, you have compliance officers, credit officers, right? You have guys who are on the floor and they'll hear you and you'll be putting in an order and they'll be like, they'll just walk over and like take the phone out of your hands and go, no. What the F are you doing, right? You don't have that in retail. So you have to have a method of trading that has an execution plan. And your execution plan and your analysis should be simple. Right? Because if your analysis isn't simple, you're going to be looking at 20 or 30 different things to take a trade and you're going to screw it up because you're not an algorithm, right? You're not a data center. You can't monitor 20 or 30 variables at the same time. Maybe just try and monitor one. And what is the most important variable in retail trading? It's the offer. The offer. There you go. The offer is the only thing you need to care about. If the market, say you want to buy 65 or 68.54, right? Or where are we now? 68.55 quarter, right? So if you buy 65.55 quarter, see how it offered up here above that white line? That's a good thing, right? But if you're long 55 and it's offered at 54, that means somebody is selling it lower than you priced your inventory. Not a good thing, right? Really simple. It's really simple, right? And they want to confuse you with all of this stuff, right? The guy who says he got kidnapped and wrote the algorithm. There's all this BS going around, right? Just watch the offer, right? Just be smart. Watch the offer. When the sellers raise price, don't short it, right? It's so simple, right? Would you be short this right now? No, because you'd be getting stopped out, right? Use your levels, right? Just wait for the trade. If you don't know how to take the trade, you're going to have to learn how to execute. And we're going to be running an execution class at 11 o'clock Eastern today. It might be a little slow, but we're going to use the slow market to help really solidify concepts. Yeah, the other thing is learn one market. Don't try and trade 3 or 4 markets like you're like I talk to these people and they're like, I trade NQ and ES and Russell and 3 or 4 different stocks. I'm like, yeah, great. Do you make money? No. Okay. Now let's see if we do a look above and fail at 58 3/4. Right. Most of last night's inventory is priced up here at 61. So let's see. I want to see if my levels are working. So I have a 5-step process. We do it every morning before we put any money to work. You trade to use volume to confirm if it's a trap or not. Well, are you consistently profitable? My opinion is if you're consistently profitable, that's great. If you're not consistently profitable, get rid of it. Because I actually have no idea what you just said. Right? How do you know if it's a trap or not by the volume? Maybe you have some insight that I don't. So, knack peep, are you making money? If you're making money, I think that's beautiful. Right? You know, as the great Cat Williams says, make your paper, boo-boo. But if you're not making money doing that, then it's not working. Does that help? So what is your execution plan around using volume to confirm if it's a trap? So how do you trade that? What are the steps? What are the mechanics of that? No? Yes? Maybe? So this is kind of looking like a look above and fail of 58 3/4. We'll try a test trade here. What the hell? Right? Short 58 1/4. I'll put my stop at 59 1/2. and I'll go put in a bid at 57 and a quarter and see if I can catch any seller. If it gets over 59, I know the trade's not going to work. Pretty simple. If what you're doing, folks, is working, do it. If what you're doing is not working, then you don't know what you're doing. It's really simple, right? If you are doing something and you're making money every couple of days, every day, and you're not losing a lot of money when you don't make money, the biggest thing is to not lose money, right? So if you're making money, then whatever you're doing is working. You've got a way of doing business. But if you have a strategy that you're trying and it's not making money and you can't verbalize what's going on, I'm short 2 contracts. I'm going to put in a bid at 57 and a half. That quarter bid I'm going to move up to half because I see that there's a little bit of a bid here, right? And I know that shorts are trapped right here. So this is just a test trade to see if that look above and fail works. What is your opinion adding volume to it? I don't understand what you're saying, my friend. Unfortunately, if you could ask a question and then, right? So I'm covered now, right? I'm flat. Small trade, right? If you make money trading, that's great. That's beautiful. We should celebrate that, right? Well, do you make more money than you lose? I wouldn't add volume unless you're making more money than you lose. It requires a lot of knowledge based on chart observation. Okay. Not sure what that means, Harris, but it means you have to put in some work? There you go. There's the look above and fail. So had I shorted a few more contracts at that 58 area, I'd be covering here at 55. Do you guys understand what I'm trying to say here? Now, I know you guys are trying to ask questions, but the questions you're asking, they're not clear, so I can't answer them, right? But what I can show you is how to do a trade. So why did I short 58? Because I identified a seller at 58 and 3/4. So I sold alongside, and then I put some bids down to buy it back. Do you guys get that? Does that make sense? Yes? No? Maybe? Right? So I identified that there was a seller here based on my levels, right? So I short, stop, cover, and if I had some more contracts, I would have been covering 57, 56. And it goes right back to the last cost basis. Yeah. I identify that there's a seller or a group of sellers. They're going to push price down because they're putting it on sale to capture the buying. I sell next to them. When they stop selling, I'm gone. I mean, that's not a difficult concept. How often do you swap from going long to short or the other way around? Meaning, how long do you wait to change your trading direction? Well, it depends on the market truth, right? I like to trade, make a little bit of money, and then stop. right? So I'm not one of those guys who's in and out and in and out and in and out, right? So if I'm long and you show me a seller, then I'll change direction. If I'm short and you show me that supply is running out, then I'll change direction. My change of direction is based on common sense. It's not based on time. Does that make sense? When I change direction, that's based on what the market is telling me, not a set period of time. So if I'm long and you show me that there's a bunch of sellers, I'll get out of my long and maybe flip to a short, right? If I'm short and I see a whole bunch of bids come in, right? Then I'll have to reverse. So you're thinking a long would have been better at 56? Maybe. Miguel, no, I was an institutional trader. I traded for offshore banks, hedge funds, and I've taken 200 companies public and sold billions of dollars worth of stock into the US markets from offshore. I'm a liquidator. I work for insiders of public companies. So if you take a company public, you hire me to make the market, create the chart, bring in buyers. That's what I do. You're hilarious, Harris. In this case, truth, we were looking for the look above and fail. I wasn't looking for a long. Hindsight's always 2020, right? But you booked that trade, right? Don't sit there and second guess the trade. You booked the trade. That was the trade, right? You booked the trade, you made money. Now don't second guess yourself. Do I know Einstein of the New York Stock Exchange? No, I do not. I don't even know who that is. Is that a person or is that an algo? No, oh, no, I don't know who that is. I don't know him. Yeah. Oh, that's great. No, I don't know the guy from the New York Stock Exchange floor. The floor is pretty much closed now. They just have it. It's just for show. There's no real business done on the floor of the New York Stock Exchange anymore, unfortunately. Those days are over. They went the way of the horse and buggy. Right? All the old stuff. There you go, Howard. You creeping back into it, eh? Just remember what we spoke about, brother. Oh, you just turned 18. Well, that's great. You got lots of time to learn your craft. It's a beautiful thing. No, we didn't, Raj. I know they're talking about, Raj. We've never interviewed him. Yeah, I think you zigged when you should have zagged. I think you're thinking of Paul Asmar. I could see gamers picking up trading, right? Concentration. Yeah. Paul's great. Love Paul. Haven't seen him lately. Oh boy. Well, now it's kind of. Remember what we said earlier? So they loaded the truck, went sideways, went to the next store. Now they're at the next store. These are little distribution areas. And if you distribute and hold price stable, buyers will come, right? Yeah, all you young guys, I think it's great what you're doing. I think it's wonderful that you're starting young and you're learning the business. I think it's a beautiful thing. It's it's wonderful. The biggest thing advice I can give to you guys is don't lose money. And if you don't know what you're doing, don't trade. Sit and watch. Sit and learn. It'll be well worth your time. Not much else is going on. Not much else is going on right now. Does anyone have any questions? If not, I'll let you guys go a little early. Have a good day. Be safe out there. I'll be around at 9 a.m. when we have our next session. If you want to learn to trade in a good environment, come to tradingsyndicate.org. I'm vwaptrader1 on X. If you have any questions, message me anytime. That's vwaptrader1 on X. And thank you so much for being with us this morning. Bit of a slow morning. Have a good one. Get some rest, Badir. Don't go work on the software now. Get some rest. We'll chat later. Thanks everyone. Trade safe, okay? And we'll see you at 9 Eastern time. Have a wonderful day. Bye for now.